Okay, so now maybe let's move to the next presentation, which is a joint session by Mr. Rasmus and Mr. Hugh. Can you share your screen? Yes. So yes, so welcome our next presenter, Mr. Rasmus and Mr. Hugh.
Yes, definitely. Can you hear us?
Yes, we can.
And I guess you're there as well, Hugh, right?
Yep, I'm here. Thank you.
Okay,
yeah.
Great. Should we just get going?
Yeah, you can start.
Okay, thank you very much. So this presentation is going to be a shared presentation between Hwaseung Enterprise and Act Renewable. And the two companies has come together in a collaboration in Vietnam specifically because we are both partners with Adidas. Act Renewable is the strategic renewable energy advisor for Adidas and their supply chain initiative globally. And Hwaseung is a very important supplier to Adidas in Vietnam. So what we're going to talk you through today is really to try and understand this PPA or this renewable topic from the corporate side. And as you've just seen from the two previous presenters, the focus is very much on the bigger brands and what they will do. And I think what we need to look at in Southeast Asia, and the reason why we have decided to come together here at Renewable and Hwaseung, is basically to try and give this perspective from a local footwear manufacturer's perspective. So this is you could say this is exactly one of the examples that was mentioned before from NL, that we're going to talk about a supplier to the brands and how they are looking at the world of renewables in Southeast Asia specifically. And going forward. So we will have this presentation jointly. So any questions that you will have, feel free to raise them, and we will find out who will be sort of in the best position to answer the questions. The agenda looks like this. We'll have a short introduction, then we'll talk about the multinational corporate perspective and the challenges and solutions. Then we'll talk about the specific corporate PPAs in Vietnam, who I'm sure everybody interested in this topic is aware of. And then we will go into the local footwear suppliers' perspective and the considerations and challenges that they are facing moving into this space and trying to follow their brand clients on this journey going forward. Hugh, would you like to introduce yourself quickly?
Yep, sure. Thank you very much. Happy to be here. My name is Hugh Hamill. I'm a strategic advisor for Hwaseung Enterprise. I've been with them for about 6 years. Prior to that, I was senior vice president for Reebok in charge of global operations. So I was in charge of global sourcing, development, and costing. I was there about 22 years. Unlike everybody else on this call, I'm not an expert in this area. I'm a footwear guy. So I have 36 years in the business from a footwear perspective, and 26 of those years have been based overseas. I've lived in Korea, Indonesia, Hong Kong, and currently right now I'm in Vietnam. So, Rasmus?
Thanks, Hugh. Yeah. So my name is Rasmus Nedergaard. I'm the managing director of Act Renewable. Act Renewable is a strategic renewable energy consultancy based in Germany, but we work with multinational brands all over the world and with their supply chains. We advise them on the best journeys for reaching their renewable energy targets. We are absolutely renewable technology or product agnostic. We don't care if our clients are interested in certificates or PPAs or direct investments in wind or solar. What we're most interested in is to make sure that they meet their needs and that we get them across the line at the and meet the target that they have set. I have 15 years personally experience in the renewable space, and before joining as managing director for Act Renewable here in Germany, I'm originally Danish, and I've worked 10 years for Vestas and lately as a senior manager on energy and renewables for the Lego Group, helping them across the line to 100% renewable energy. So let's move a little bit further here. So Act Renewable, what we basically do is that we sit there as the initiator of corporates being able to transition into renewables. If you remember some of the graphics that you saw before, where you saw the sectors and you saw the amount of PPAs being signed, that's actually down to a very limited number of companies. In Europe, for instance, last year, I believe the number is between 20 and 30 corporate PPAs were signed, and about half of them was signed by Google alone. So there are very few companies that currently are able to sign a PPA, and that has to be accelerated if we need to be able to reach our targets going forward. So what we do at Act Renewable is basically that we help the corporates reduce the complexity of their renewable challenge, understand what they need to do and where they need to do it in order to come across the finish line and get as much renewable in their portfolio as they need. The way we do that is that we've mapped out a simple path for corporates. Generally, all corporates follow this path here. Some are more advanced than others, and some have been taking these in slightly different order. But basically, they need to understand what does the world around them look like, where are they based, what's their footprint. Then they need to have commitments, either that being internal commitments or science-based target commitments, RE100 commitments, or UNFCCC commitments. Then they need to create a strategy, and the strategy is very much depending on what's the preference of the company itself, because not every company is suited for a PPA. Some have a fluctuating energy consumption, which is not suited for a long-term fixed offtake agreement. And once that's in place, we usually support the companies setting up the procurement plans globally to make sure that they're able to implement and ultimately realize their renewable energy goals. Working in this space for many, many years, we found out that there are three things that is common for every single corporate around the world when they're engaging in renewables. Three sets of complexities. And these sets of complexity are relevant right from the first time you enter until the very last step of your journey. And that is creating a business case. Now, a business case is not just about money, and especially within renewables, it's also about brand value, where's your position with your consumers, where's your position with your clients. That's something that has to be taken into consideration in such a discussion. And creating those business cases, making sure that you have the right data, that you understand where your opportunities lie, and what your limitations are, and what good business case looks like for you, and compare it with what is actually available in the space that you're entering into. That's important. Secondly, there's the technology. Most companies do have a preference for whatever reason, either because they come from the US market and their PPAs are very abundant, or they have a preference for certificate trading because they've done that for a number of years in other parts of the world. But the fact is that those technologies and these renewable energy products that surrounds them as PPAs are not available everywhere. So you need to modify your approach to technologies. And what we generally see here is that the more diverse, the better it is, because no company will be able to rely on a single line strategy for renewable integration. And then finally, we have the financing part. I would even sometimes say the fun part, because this is where there are, if you just go back 10, 15 years from now, there was a lot of direct investments in renewables. And now most of the technologies and the products has become mainstream or common sense. And with the current stock market, the uncertainty, we are also seeing that a lot of money is being funneled into renewables as a safe infrastructure investment. And therefore, there is a lot of money available in parts of the world, at least, to fund. So you have still the option to direct invest yourself, but there is also opportunities for third-party investment here, both CapEx, OpEx, multiple opportunities. So those three areas of complexity is really what we try to crystallize with our clients and make sure that they fully understand what risk they're taking, choosing one or the other renewable pathways. Over to you, Hugh.
Okay, thanks. A little bit about Hwaseung Group first. It is a Korean company with headquarters in Seoul. The company actually started in 1953 as a footwear manufacturer in Korea. And then from there, it branched out into other areas. We moved into the chemical area, then we moved into the automotive area, and we've also moved into distribution. So Hwaseung Group is about a $4.5 billion company. We employ about 54,000 people worldwide. We have a presence in 33 countries. And Hwaseung Enterprise is the division of the company that we're talking about now. So that's who I'm representing, and that's who we're working with from the Adidas perspective. And we're, last year, 2019, we were a little bit over $1 billion in revenue. And then, next slide. As far as HS Enterprise is concerned, a little bit more information. We manufacture in 3 countries of origin: Vietnam, China, and Indonesia. We will be producing in India within the next 3 years. We're working with Adidas right now on a plan for that. We're a little bit unique in the industry in that we only produce shoes for Adidas. We're the 2nd largest supplier for them in terms of volume and revenue. So we represent about 20% of their global volume. We produce some of their most important product. If you have a familiarity with Adidas product, Boost is a major product for them, and 4D, which is a 3-dimensional molded bottom. So they're the technologies that we have future development centers within our facility in Vietnam. Just to give you a little bit of an idea, the company started, as I mentioned, in 1953, but then we restarted again in 2012. We restarted in Vietnam, and you can see on the graph on the left-hand side how the company has grown over the years. In 2002, we were only producing 200,000 pairs of shoes a month, and that was for Reebok. You could see that we expanded to a 2nd country of origin and into China, and then eventually a 3rd country of origin in Indonesia. So from 2002, where we were only making 200,000 pair a month, currently last year we were making over 7.2 million pairs per month. So that gives you a little bit of an idea of who HS Enterprise is.
Thanks, Hugh. Right, so what we're trying to bring into this conversation is the corporate perspective. Now you've heard from 2 developers analyzing the market and giving really good perspective on what that looks like. Now we're going to step onto the other side and really try to sort of see it with the glasses of the corporates here. And the first thing you can ask yourself is, what do they want? And it's pretty simple. They just want credible, renewable energy, and that's it. Most corporates do not want to sign a PPA. They do not want to have a rooftop on their roof. They are probably not even knowledgeable of what that is, because they're used to just procuring electricity as a commodity from wherever they are. It's all about plug and play. So when you, as a developer or an advisor in this space, you really need to think about what the corporates are looking for. And in this case, they're looking for credible renewable energy, to the reasons that Enel very nicely explained, that there is a requirement, almost I would say, from their suppliers, from the consumers and from the brands to the suppliers, to make sure that not only the energy is renewable, but it's also credible. Now, that of course is easy said, but it's very hard to get in parts of the world, and especially in Southeast Asia. So what the corporates also want is that they want low complexity in the products that they purchase. They want to take as low risk as possible. They want to understand what they're engaging in, i.e. the lowest, the best kind of transparency. Many corporates are very keen on visibility, because they want to be able to show that what they're doing, at least that's what they're doing right now. You could say, if I could just pause for a second here, you could say that there are 2 types of corporates. There are the corporates that are entering into renewable energy for cost savings as a first priority, and then you have the ones that are entering into renewables as almost as a brand perspective as the first priority. I would say if you go back about 10 years, it was all brand, because the prices were higher on renewables. Now prices has come down, and in many cases they're even lower than the alternatives in the markets. And that's where visibility comes into play. Then they want credibility. And credibility is best practice. There is no standard for what good looks like. There is no preference. There are RE100 who has an idea of what it looks like. There are others out there that has a different opinion on what the priority should look like. But generally, you want credibility. So you need to be able to prove that what you're doing is also accepted as a good opportunity to actually claim your renewable status. And then they want scalability. And that goes both ways. So again, signing a PPA is a great way of upscaling your uptake of renewable energy. But if you down the line will need to reduce it, then that becomes a problem because you have likely signed a long-term contract for a fixed price for a fixed amount. So scalability in both ways is what a lot of companies are also looking to get into. So the commitments that I mentioned before that we're looking at from a corporate perspective, we have listed 5 of them here. For the sake of the story here, where we sort of have Adidas in the mix as well, we have listed the UN Fashion Industry Charter for Climate Action. We believe that is one of the strongest commitments in the market today, because in contrast to RE100, which is only focusing on the brands themselves, and if we take a brand like Adidas, they have less than 1% of their carbon footprint in their so-called scope 2 emissions, so their own consumption from offices, warehouses, and stores, and that's what RE100 is focusing on. Whereas the UN Fashion Industry Charter for Climate Action is focusing on the full value chain. That means supply chain, i.e. the upstream, and even the consumer, the downstream, which means that a 30% emission reduction here is much, much, much higher than what the signatories of, or at least within the fashion industry that has signed the RE100. Whereas if you have your own manufacturing footprint within your control, then of course the RE100 is a much, much stronger commitment. But for a company like Hwaseung, they basically have to look at the UN Fashion Industry Charter, because they know that for Adidas to be able to meet this charter, they will have to deliver almost all of the 30% emission reductions required. And that counts for all the suppliers in this space. And with 100 signatories, I would say the entire apparel and sportswear industry across Indonesia, Vietnam, and the rest of Southeast Asia, this is almost becoming a common goal, that any supplier will need to be able to reduce 30% of their emission reduction by 2030 if their brands are to succeed on this journey. So I think that's a very powerful commitment made. Then you've got the Fashion Pact, which is a European pact started in France during a G7 meeting last year. Then you've got the Science-Based Target. The Science-Based Target is really an interesting target and commitment made, because first of all, it's science-based. So it links to the 1.5 degrees or the 2 degree temperature change max that the IPCC set out as the goal. And then it's basically backtracking it to how much do you as an individual company need to comply. And if 40% of your carbon footprint sits in your supply chain has to be included in your science-based target. And that means that in most cases, the science-based target is really, again, relying on the scope 3 emission being reduced, and the scope 3 emission also includes, besides manufacturing footprint, flights and travel, distribution, and so on. And then, of course, you have the old lady in the room being the Carbon Disclosure Project, now just called CDP, where brands are disclosing and committing to emission reductions and basically sharing across a wider platform. So those are generally the most important commitments that we're seeing out there, and they're all pushing in one direction, and that is reduction of emissions, not only within electricity, which approximately takes up about 50%, but also in heat and others. Within the Fashion Charter, for instance, there is, besides a 30% emission reduction, there is also a pledge to say that no new coal, and they're basically looking at phasing out coal for heating. So a lot of the Southeast Asian manufacturing plants that are using significant amount of heat will have to find alternatives to coal within the next 10 years. Yeah. So the challenges that the corporates are generally facing is demand and supply fluctuations. Now, Hwaseung is producing plus 7 million pairs of shoes per month for Adidas and Reebok, but I'm quite sure that the COVID-19 has impacted their production and therefore also their electricity consumption. So you ask yourself there, how do you mitigate that risk? How do you make sure that you're still supplied with renewable energy, but you're allowing yourself to grow and shrink, open up factories, potentially close down factories as you move along? That's one of the challenges that many corporates are facing with respect to renewable energy. Then you've got the low flexibility in solutions. There is the scalability. If you're looking at rooftop opportunities, that's fine. It's the first thing you would go for. It's simple, it's visible, and it's usually a good business case, but it's not scalable. It will not meet your demand for most manufacturing companies. Then you've got the contractual terms. Now you're basically asking a company who was usually just purchasing energy off the market, or even in some cases of a single provider in an industrial park, to now look into how to procure energy at a much more complex level. So the contractual terms here are tying your hands up. For instance, the long-term agreements of the PPA in Southeast Asia being between 12 and 20 years. How do you mitigate such a low flexibility in your production and in your business? Then you've got the legislative framework complexity. Depending on what country you're in, there is a whole new set of legislation. Many of these companies, including Hwaseung, are producing in multiple countries at the same time. They're even shifting production around depending on whether Adidas needs more boost this year than they did last year. And therefore, of course, they need to understand the legislative framework sitting around renewables for every country in which they operate. And that is a challenge if you didn't even have to think about legislative frameworks for energy before. And then, of course, you have the lack of available solution at scale. Today, we have been speaking a lot about PPAs, and it is the talk of town. It's been that in Europe for many, many years, and the US for even longer. But if you look across the globe, there aren't actually that many countries where PPAs are available. It's actually quite limited. I can't put an exact number on, but I would say it's probably in the 20s at max. And that means that if you're not in these countries, then solutions at scale may not be available to you to the kind of quality that you're actually looking to. So that's also a problem. If we take the case of Hwaseung here, yes, we're engaging in the DPPA program in Vietnam together, but what if they now shift their production to China? What kind of opportunities do they have there at the same scale? And then the time pressure. A lot of the brands are signed up to 25, 2030 targets. That's only between 4.5 and 10 years away. And that means that things really has to move fast here. Legislative framework has to change rapidly, be able for companies to accommodate, and the investments also has to be available. And then, as I've said before, delivering on these targets really relies on third party for many brands. H&M, the Sarah Group, they all rely on their suppliers and how they cooperate with the suppliers, because now it's a contractual relationship with a contract of between a year and 2-3 years maybe, but that may have to change if we are to be able to get any deeper on this topic. So the solutions that we're looking into as an advice sort of from our side is that if you look at the developer side, we simply need the developers to be more creative on develop renewable energy products. And the more diversity, the better. I would say as a corporate advisor, what we are seeing right now, even from the PPA contracts, that they're very developer centric. They are tilted towards that the developer needs the PPA to be able to sell their project at the end to an investor, which in many cases is fine. But it is just emerging at the moment that the corporates also have an opinion on what such a risk profile should look like. For the governments, we need solid legal frameworks that really support corporate transition to renewable energy, and we need it fast. Especially if we look at Southeast Asia, Some of the certificate schemes are developing, but too slow. If we look at the PPA schemes that we're seeing in Vietnam is developing, but is postponed and too slow, and the same in Malaysia and other countries as well. So basically, we lead the corporates to support, and the developers and the corporates really support the government with what do they need for these frameworks. So more integration with the governments and much more solid frameworks to progress. And then on the corporate side, the corporates also has a chance here. They need to work much harder sector specific. So in many cases, the manufacturing footprint within the electronic industry, chemical industry, and the apparel industry will have a huge benefit from cooperating because they generally share the same supply chain with the same challenges. So we suggest that there is a focus on, from the corporate side, really to align and standardize the request and expectation to the suppliers. So the suppliers doesn't have 5 different expectations from 5 different clients to what a renewable program should look like, because that was just going to break it all down and make it way more complicated for the suppliers to deliver on all of their clients' expectations. And then we need the suppliers to act differently. So far, the suppliers has been very reactive. They are not moving unless their clients are telling them to. But what we are seeing is that by making renewable energy a proactive business opportunity for suppliers, then there may actually be more clients in the future, because as Anel mentioned before, this is what they are being requested to do. So, but they need to understand that it also comes with an investment, both in terms of time, knowledge, and money to be able to develop into this space. And then, of course, we need the brands to favorizing or incentivizing the suppliers taking these climate actions, potentially looking at some of the contract structures that they're offering, maybe backing up if that is required financially on certain projects. And that's also something that we're seeing in the market right now. So those were sort of the breakdown between developers, governments, and corporates. Now, moving into the corporate PPA pilot in Vietnam, the picture on the right side has already been shared twice today, so I'm not going to go into it. But basically, we're looking at a virtual PPA, or so-called contract for difference. I'm not going to spend a lot of time on this because I'm sure you've already know. Otherwise, you have the slides. But basically, it's explained by earlier, is that it's a contract for difference where you are relying on a certain price point, and then if the price is lower, then you receive money from the generator. If the price is higher, then you have to pay money for the. So that is basically part of the risk here. So the aim of the DPPA framework from the Vietnamese government is twofold. First, it is to attract more investments from foreign brands, and they know that the foreign brands need renewable energy to be able to do so. So this is one of the ways to do it. And then secondly, they need to build out their electricity capacity in the country, and this could potentially be a way to do it without having to do it themselves, but attract foreign investments directly into the infrastructure. So that's the goal as we see it. Now, the limitations that comes on this program, to be very honest, is that electricity in Vietnam is a cash cow for the government. They have monopoly on the supply, unless you're in an industrial park, which then again, of course, gets their supply from the authorities here. And that means that they're giving up part of their business and basically letting others engage into this space here. And then, of course, the big elephant in the room is, what's the price going to be? Currently, the program is, of course, not finalized yet. It has not been ultimately signed off. The expectation is that it will happen in the second half of this year, but nothing guaranteed. And the price components that we're looking at is this new wholesale market that has been established last year in Vietnam, basically to accommodate this opportunity here. And then it's the so-called DPPA charge, which is the distribution charge that the government is putting on top of the wholesale market price and on top of the CFD price, the strike price that has been agreed. So right now, the prices are not clear, and it's not exactly clear what the different components are. But what we are seeing, without being able to disclose in details what prices we've been offered in the market, right now we're in the same vicinity as what the retail market price is. And then depending on what the size of the DPPA charge is going to be, it could either be slightly higher or slightly lower. But that's really what the framework looks like right now. Of course, the uncertainty on the price is the government going to change the DPPA price over the contract terms? So if a company like Hwaseung signs a 20-year deal, you know, when and how will the authorities be able to change the DPPA charge to make sure that they get either a larger piece of the pie? And what should the wholesale market look like? Remember, we are in a regulated market, which I believe is one of the first PPA setups that is being established in a regulated market. So that's something that is very interesting. So the Adidas model for engagement, if I may just spend a little time on this, is quite unique, we believe. What Adidas has decided to do is that they have engaged with Renewable to provide their technical support to strategic selected suppliers. So some of their strongest suppliers in Vietnam has been asked to join this program, and Hwaseung is amongst those. And then Adidas is offering them the technical service, the negotiation support, to basically manage their way through this PPA negotiation and ultimately through the application process with the authorities once a term sheet is signed. And what they do is that they match developers and suppliers. And in this case, we're able, because we have multiple suppliers available, Hwaseung is one, and they all have different consumptions and they have different load points. So we're actually able to mix and match the developers' projects and the size of the projects with the different Adidas suppliers. And through that matchmaking process, we were able to meet these criteria that the government has set very strict, at least what they're proposing to set quite strictly on the program. For instance, that the DPPA offtake or the CFD should cover at a minimum 80% of the electricity consumption of the load point that's part of the program. And then the last thing is that we're supporting Adidas in their work with the local government to really try and bring the corporate perspective in here. So it's not just the government perspective, it's also the developer perspective, as I'm sure Enel is working directly with them on, as well as mentioned here, but also the corporate perspective, which is then brought in by Adidas on behalf of their entire supply base in the country. And then just before I hand over to Hugh, then we've got the supplier perspective. Hwaseung is a very, very important supplier for Adidas and takes up a large share of the corporate footprint in the country. And therefore, it is important for Adidas to be able to meet their targets and ambitions and expectations from their consumers, that Hwaseung really joins this and invests time and effort into it. For Adidas, I think the most important thing in the beginning for this was that Hwaseung had the right mindset. And the right mindset here is a proactive mindset, where you take this as an opportunity and an opportunistic way of actually becoming renewable. And you have it as part of your strategy, as you will see from Hugh in a minute. And then the fact that Hwaseung is ambitious here, they're really trying to push the envelope and find opportunities, not only within the DPPA space, but also for rooftops and other opportunities they're pursuing, and really try to make this transition into renewables happen. So that's why we bring Hwaseung today and would like to bring this perspective forward. So I think I'll hand over to you, Hugh, and give you an opportunity to talk us through the perspective from your side.
Thank you. Thank you. As mentioned, my role is strategic advisor. So essentially, I'm responsible for creating and communicating the strategy of the company, both internally and externally. What I found actually externally, which is to Adidas, is quite easy. Sometimes internally is a little bit more difficult, you know, to make sure Hwaseung as a corporation in multiple locations stays on the same strategy. So what we created in 2016, or what we utilized, is a very simple tool, a one-page document to keep the entire company on the same direction, so that we spend money in the right places. The programs we utilize are the correct ones, that, you know, and the people we hire are the right ones. So we created this tool called OST, Objective, Strategy, and Tactics. We started it in 2016. We had one for 2020. And at that time, our objective was to become 20% of Adidas footwear volume by 2020. At the time we created it in 16, we were about 13%. So as I mentioned, we are 20%. So the tool was successful for us from 2016 to 2020. So at the end of 2019, we started to build on that and said, okay, where do we need to go for 2025? So what you see here is a one-page document that we use internally, and also we communicated externally to Adidas. As mentioned, we're a $1 billion company. We want to grow to $3 billion in 2025. We have 4 buckets of strategies. We call them differentiation, digital, specialization, and foundation. So those are programs that we know we have to work on in order to earn the capacity growth that we want to get from Adidas. What you see next to each one of them, like digital manufacturing or digital creation, those specific programs that we have. And each one of those programs, we create tactics against. So we create programs that are aligned to each one of those. And we have a person in charge of each one of those areas. And that person is in charge of creating a roadmap. So our intent was to use 2020 as building the roadmap year. So we wanted to build the roadmap to 2025 for each one of those strategies: digital manufacturing, digital creation, speed, manufacturing excellence, all those points. When we created this, what I recognize is that we were, I mentioned we're a Korean company, but we'd like to start thinking we're going to be a global company. So there was a couple things that were fundamentally missing, I thought, from our OST. And I built them to the bottom of the platform. One is human resources, a billion-dollar company growing to $3 billion. We need expertise in many different areas than we used to. We need a strong human resource department. Digital is a good example of that. 3 or 4 years ago, digital was not even a word that was mentioned in footwear manufacturing. Now it's a critical part of how we operate. But the other area was sustainability. There's no way a $3 billion company who is 20% or more of Adidas's production could get to where they wanted to get without having a sustainability strategy. What I found when I looked around the company is that I had experts to fill every single slot in this OST except for sustainability. We didn't really have we had basically nothing. We didn't know exactly what we wanted to do. And frankly, it was falling to me in 2020 to determine what direction we should take from a sustainability perspective. Luckily, Adidas approached us, in March, and they said that, they had signed the UNFCCC and that they were interested in reducing the greenhouse carbon gas. They asked us to participate in the pilot program with Act Renewable. And then we met with Act Renewable. I think it was back in March that we started the program in Vietnam. So next slide. So since that time, we have, formulated I guess it's an elementary strategy, but it's a beginning, right? So this is where we currently are. We have 3 programs that we participate in. The first is rooftop solar. We deal with a company called Copper Mountain Energy. And we have put rooftop solar on 3 of our buildings, our newer buildings, in different locations. Essentially, in measuring it, this is only about 2% of our electrical usage on it. We also now are expanding as a company, and we have plans in place for at least 4 different new locations inside of Vietnam. And inside of those locations, the business model that we have with our internally is that what we do is we investigate the land that we want to utilize. Then we meet with a construction company. We ask the construction company to purchase the land. And then we work with the construction company to purpose build a factory for us. And then we rent the factory for a period of time from the construction company. And what we've been finding is the construction companies are saying to us that they want to build rooftop solar on top of these new buildings. So this is a sort of a second model for us. It's basically like construction company developer. And then the third one is what Ramos was just talking about, is the DPPA. And Anal, who spoke previous to us, is the company that we're hopefully going to come to an agreement with on this program. And that's the biggest part. So the first program is only about 2% of our total electricity. The second one is probably about 10% if we did it. Basically, the construction companies have told us that that we don't have to purchase the electricity off of the rooftop, so we're waiting to find out what the results of the DPPA before we go forward with point number 2. But to answer the question that sort of Ramos was talking about there is why do we want to do it? You know, the first one really is corporate responsibility. It's the correct thing to do. It is consistent with the corporate values, you know, established by our chairman. But he's a businessman, you know, so it's not something he was telling us to do, but it's something that he appreciates us coming to him and saying, we think we have a solution for a program that makes sense for us from a corporate responsibility perspective and also from a financial perspective on it. The second biggest one is the renewable energy certificates. It's critical for Adidas, you know, to hit the UNFCCC information on 30% greenhouse gas emissions by 2030. Adidas wants to do that. They've committed to doing that. We are a major manufacturer for them, so we support those programs. And then, of course, the third one is the business plan. What's the risk and what's the reward of the strike price stability versus the wholesale fluctuations? This was a whole new world for us. As was mentioned previously, we just bought strictly off of the retail market, and this was, you know, simply a budget item, and we really didn't look at it from any other detail other than that. But these are the 3 programs that we're currently working on at HS Enterprise, and they're the reasons why. Next slide. So what are the challenges that we've been facing since March? The first one is the lack of internal competencies to drive this alone. As I mentioned, we don't have the internal expertise. You know, we have a guy in maintenance who could get me the information if I ask for what is our usage at any particular facility, and he can get us the bill. But as far as a major program like the DPPA that we're talking about here, we had no experience and we had nobody internal that had the expertise. It's been great to be able to, you know, act Renewable with the intermediary role that they've just mentioned. Without them, you know, we wouldn't have been able to move off of first base. You know, the second is that we really needed to have an understanding of the sourcing strategy of our customer. That's Adidas. So Adidas is very good with us. They give us 3, 4, 5-year plans, so we know where we stand. We know that if we perform the way that we're supposed to perform, and we you know, give them an idea of where we're heading, you know, we have a good idea where the business plan is going to go. So we're confident with Adidas and ourselves in Vietnam, but then we also had to project that onto our businesses. Businesses evolve over time. We have a major facility in one location in Vietnam. We're slowly transferring that to a second location. That raised a lot of questions for me, you know, whether or not we were signing up for a location or for a corporation or what. But it was important. We're talking about an 18-year program. So we had to make sure that Adidas and HS were aligned on where we were going to be in 18 years from a perspective of Vietnam. And we also had to know our internal business. Where were we going to manufacture the various parts and components and footwear that Adidas is asking us to make? Estimating the cost trajectory of electricity in Vietnam, that's something we had no idea. Act Renewable, at the very first meeting, they gave us, I think it was about a 10-year, decades-long curve to show us what the prices have done. In the rooftop that I mentioned, the very first program that we've already established, we had a company that worked with us, and they gave a projection of what they thought it was going to be. We've done an internal projection, but again, it's something different. We never really looked at it from that perspective, you know, estimating the cost trajectory of electricity over an 18-year period in multiple locations inside of Vietnam. The other challenge we ran into was essentially securing legal representation for the term sheet negotiations and the contract for difference. We have our own company, a legal company that we deal with in Vietnam. When we brought this to them, you know, they took a look at it, they studied it for a week, and then basically at the end of the week, they called me up and they said, you know what, we don't have any expertise in this. We have no familiarity with this. We recommend that you find somebody else. So, you know, that was a bit of a problem because, you know, this is an 18-year arrangement. There's a lot of money associated with this. Again, actually, we contacted Act Renewable. They gave us the names of 3 different companies that we could contact inside of in Vietnam. We contacted one of them, a global company that had experience with these types of programs in both Europe and in the USA. And luckily, that company has agreed to represent us. But that was for, you know, a period of time that was a concern of mine. Who are we going to find as a legal representation for it? Also, understanding the nuances of the program. It seems like it's a little bit of a moving target sometimes. You know, the program was a rush. It was, you know, it was going to be approved by the Vietnamese government by a certain point in time. That time has drifted a little bit. It's been extended. As we get deeper and deeper into it, I've gone from knowing nothing about it to learning a little bit about it. I'm certainly not the expert that you guys are. But at the time, I didn't know about the Fit 2 versus a PPA. That was something we ran into early in the program. The DPPA charge is a concern, as was already mentioned, because it's a cost that we would have to bear that, as far as we know, we thought it might be fixed in the beginning of the program, but it's still not yet, as far as I know, fixed, and it could vary over the course of the contract. So that's you know, that's something we have to work on. Wholesale and retail prices, we didn't really know about wholesale prices. It's a benefit of this program that we're understanding now to be in it, that, you know, electricity above what we commit to, we can be buying in the wholesale prices, which is an added advantage for us. And then recently, I didn't realize, you know, I thought that all of our electricity came directly from the grid, EVN, but I'm finding out a couple of our facilities, about 3 of our 7 facilities, the electricity comes from the grid to an industrial zone, and we have contracts signed with the industrial zones. So we're in the point of discussing with them whether, you know, we could modify or change those contracts so that we could be working in this program at a much higher level. And then the last thing is actually briefing our internal senior management team. At HS, it's been an entrepreneurial and instinctual company for many, many years. It's been successful. As I showed you the graph from 2002 to 2019, it's grown quickly. But this is an entirely different area. Our vice chairman and our CFO are based in Seoul, Korea, and our CEO is based in Vietnam. None of them have experience with this. So trying to communicate to them exactly what the program is about, what the advantages of the program are, what the risk of the program are, has been you know, a little bit of a challenge because it's not like I'm an expert, so I want to make sure that the information that I'm communicating to them is correct on it. So that's the major challenges that we've been facing. You know, as far as ambition or the future, we want to continue to be a very strong partner to Adidas. We've had, you know, great success being their partner. We want to be at least as big as we are, or as a percent or bigger with them. And we would like to be known as a leader in the Adidas suppliers in the renewable energy field. So that's a major ambition. Secondly, I still myself have to create a 2020 to 2025 roadmap for reducing our carbon footprint. This is becoming more and more important, as was mentioned in previous presentations from a brand perspective. You know, it's something the brands communicate. Some brands, Allbirds as an example, they communicate what the carbon footprint is of each one of the shoes they make. This is inevitable, a direction that we need to be moving in. So far, the programs that I mentioned to you, the 3 programs on a couple slides previous, they were all from Vietnam. But we need to create programs for China. We need to create them for Indonesia, for Vietnam. And also, as I mentioned, we're going to be moving into India. So we need to create that roadmap for carbon footprint reduction for our HS enterprise. And then, you know, the immediate next step, we're in the, I don't know if we're in the beginning, middle, or close to the end. I think we're probably closer to the end than we are to the beginning. We want to complete the DPPA process successfully, so it works best for everybody involved on it. That's it, I think.
Great, thank you. Well, I think we have a few questions lined up, so I'm not going to spend too much time on the summary. I guess you can sort of all read it here, but generally it's about more corporate tailored opportunities, better options, and cooperation between the brand, and for all sake, more speed. That's really what we need. I think that was it for us. I don't know if there's any questions you'd like to ask. Cautious of time here.
Mr. Rasmus? Yes. Yes, thank you very much for the very valuable sharing from the corporate perspective. Now, let's take a look at the audience questions. Okay. So, apologize, we can only choose three of them because time issue, because we have very few time limit. So, messages, maybe we can start from the question number 1. Under the current regulatory regime, how does FIT and CPPA work together for solar rooftop in Vietnam in terms of structure, legal contract arrangement?
Yeah, well,
Mr.
basically,
Rasmus,
yeah. Can you hear me?
Yeah, we can.
Okay, so basically, I think from a corporate perspective, what we have realized and what we have seen is that there is a cannibalism between the two programs. And especially because they have, or originally they were not supposed to run simultaneously, but because the DPPA program has been slightly pushed out, they have kind of collided. And what we've seen there is that the local landowners or the local Vietnamese asset owners have been more tilted towards the FIT program because it gives them a long-term fixed price with the authorities rather than an opportunity to negotiate with an international brand. So what we have seen is that there is a cannibalism. So a lot of the projects was taken out of the market, and now we're basically seeing as a number of companies are not able to develop their projects to the end of the year with CFD, then a few projects are re-entering the DPPA market.
Okay, so the next question for Mr. Hugh, what are the major challenges or concerns for corporate buyers?
I think it was pretty much what I was saying. You know, the biggest one is internal expertise. We just simply don't have it. We need outside advice and guidance in order to make the right decisions and to go in the right direction. Business projections, both from our company and internally, we need to consider those. Legal assistance is something that I think has to be considered, because if it's something that's new, legal teams are not going to be familiar with that. And then you always need to make sure you have a good business case. As I mentioned, our chairman he supports this type of program, but he also supports making money. So we need to make sure that we marry up both of those programs.
Understood. So the last question is for both of you. What are the driving factors and steps in transitioning from manufacturing to a company to renewable energy?
I don't know if you want to go first, Hugh.
Just going first, I mean, I showed you that OST and I mentioned digital. A couple of years ago, 4 or 5 years ago, we had nobody in our company with any information or any ability in digital. Now we have a digital manufacturing department, a digital creation department, and Adidas recognizes us as a leader in both of those areas. I look at this similarly. Adidas is asking us to move in this direction. We are a manufacturing company. We always will be a manufacturing company, but we need to make the commitment to the renewable energy. That means we have to change the corporate culture, to make sure that it's part of what we do and how we consider our business. And additionally, we have to start hiring the resources to manage this in a responsible way in multiple locations over the next few years.
And I think from my side in general, what we're seeing, the manufacturings are transitioning simply because they do see the benefit of this. They see the business case, not necessarily on a one-to-one at the moment, but they do see that this is an opportunity for them to retain long-term agreements with companies. It is shifting to a point now where it is still a window of opportunity, but soon, I believe in a couple of years, if it will become the opposite, that if you don't do it, you're out. So I think that's the edge that we're balancing right now. And then, of course, with the reduction of prices on renewables and the increasing power prices that we expect to see in most markets around the world in the coming years due to increasing demand, then yeah, we'll probably still see a positive business case on renewables in the future, not only in the Western and yeah, Western part of Europe, sort of in the Western world, but also in the Eastern world going forward. So that's how we see it.
Okay, so now let's take a look at the Q&A box. So may you open the Q&A box, and may I choose a question from Ding Dong? How would you normally finance a project like the Hwaseung deal in Vietnam?
Is that a question to Hwaseung, or to, because how would you finance a project like the Hwaseung deal? I mean, from a corporate perspective, it is an OPEX. They're literally just paying a price for the power they purchase and the certificates that they receive in return. So from a Hwaseung perspective, there is no financing here. It's purely a question of how do you sign the deal. So how would the developer finance it? I think it's probably more a question for Maximiliano than for Hwaseung, I would say.
Okay. So Mr. Hugh, if you want to add some comment?
So would Adidas be willing to provide guarantee or make longer contract with the supplier to match basically, we signed MOUs, memorandums of understanding with Adidas for certain periods of time, and it's based off of a checklist of criteria. Essentially, this would be one of them, but on a one-on-one basis, Adidas would not do that. But as I mentioned, you know, they say this is what we expect out of a good supplier, and if we can hit those targets in a multiple areas, we have MOUs for 5 to 10 year agreements at a time.
And I think I'd like to add to this that for at least for the conversation that's going on right now in Vietnam, Adidas does not need to sign any backing, financial backing of their suppliers, because the suppliers are has the credit ratings sufficiently themselves. So that's not required. Whether that's going to be the case in the future, I think that's a different story. But right now, at least what we're exploring at the moment, it is not necessary, as there is a parent company guarantee backing of the companies in Vietnam by the by the brands behind. Then there is one more question here. Says, what aspects of PPAs do you usually find the most challenging for corporates when deciding in terms of PPAs? Well, it's pretty simple. It's three things. It's the length of the contract, it's the price, and it's the exit opportunities. And I think what we are seeing in Europe, and I think even Enel can probably speak better to that than I can do, is that we're looking at something called micro PPAs or tier 2 PPAs, where the companies are basically paying a higher price, but they're not taking as high a risk because the risk is taken by an intermediate, which could be a utility. And then that reduces the potential contract length. Also, the price is of course higher because somebody else is taking that risk, but you have much better exit opportunities. So I think what developers needs to look at and needs to understand, as well as the corporates need to understand it from the developer side, is that this contract length, prices, and exit opportunities is really the deal breakers in here. At least that's what we are seeing generally.
Yes, I think it is all for your part. And now I would like to say thank you to all the presenters, for Mr. Kazumura-san, Deputy Head of Power Business Division in SB Energy, and Ms. Milano, Head of Global Commercial Origination of Enel Green Power, and also Mr. Rasmus, Managing Director of Actor Renewables, and Mr. Hugh, Strategic Advisor of Hwaseung Group. We appreciate your kind sharing today. And at last, I would like to remind you of the conference 100% Renewable Summit 2020 on the November in Manila of the Philippines. and the Solar Wind and Virtual 2020 on August 11 at your desk. I think this is all for today's webinar, and thanks again for staying with us, and see you next time.